What if I told you ICT concepts do not work? Even though you see all these people on social media, ICT himself, even me, using these models successfully week in, week out, what if I told you they did not work? Well, the truth is that can actually be the case if you're not properly getting a daily bias or any sort of high time frame bias. If you don't have a daily bias, you're essentially pattern trading, and the truth is you cannot become profitable long-term trading like that. What actually is a daily bias? So a daily bias gives us our directional bias for the day or session. It gives us an area to buy/sell from and gives us an area for us to target. So now we know why we need to use it, now we know what it is, I'm going to give you my 3 key steps to using bias. This, I believe, simplifies it into the easiest form to digest and makes it as mechanical as possible, because although trading isn't mechanical and each moment in the market is unique, if we make a rule set, something easy to follow, it can make this very difficult process as easy as possible. So as you can see here, I've got structure, liquidity, and order flow as the 3 main columns to finding daily bias. You can also see above that we have point A to point B. So let me jump into the chart and quickly explain to you what that is, as it will help explain everything else. Okay, so as you can see, I've jumped onto the DXY chart. I'm currently on the daily, so I'm only just going to be using the daily to give you a quick overview. However, dropping down to the 4 hour, 1 hour, potentially even 15 minute if you like that, can definitely help be even more accurate. So, as you can see here, this day is closed lower than this low. So this liquidity grab could be our point A, for example. Our point B would be the most logical place for price to target. So as we are making a pullback, this is our first point B. However, we could also have this fair value gap or this fair value gap. You can have multiple point Bs. However, this is our point A. Price has just come into here. So the chances are this will be our next point B. So as you can see, we've now swept this point B, and it is confirmed, or very likely confirmed, that we're going to be moving higher as we've swept it and closed above. So this now becomes our point A, and our point B could be anything from this fair value gap, or depending how we respect it, these highs again. As you can see, we did come into this fair value gap, we respected this previous low, but then price did come up, disrespect it. We now have this could be a point A, inverting this for with our target being this high. As you can see, if you took a trade this day, you might have gone up, targeted our point B, which was this high, which we've now swept. So looking at this, we now have this sweep as our point A. Now our point B would be this fair value gap. As you can see here, yep, price did just tap into here. Again, this now becomes our point A, with our point B being this external range liquidity, or these relative equal highs right here. We've displayed through lows and come up to these highs. Depending on how we react at these highs, though we have closed through, we could now come up into this fair value gap. So today you would have been bullish targeting these highs. As you can now see, we've disrespected this. Again, another potential point A. We could now come up to here. This high now would be our point B. As you can see, we did take some time, we fouled, came lower. Failing to take a high as well, I can go over that, is also a potential point for price to move lower, which we did. So this was a point A, fair value gap was point B. We respected the fair value gap. This now becomes point A, this now becomes point B. We swept this low, price pulled back, and then we continued higher. So this was just a quick overview of what point A to point B is. Essentially, price is always going from one area of liquidity to another, whether that's going from a high to a fair value gap, or going from a fair value gap to a high. I hope this makes sense. I'm now going to jump back in and explain the rest. So now we understand what point A to point B is, we know what a daily bias is, and why we need it. I'm now going to explain to you my 3-point system of getting it 80% right every single day. So first step is structure. So structure tells us the what. It shows us what way to look in the market, and that's dependent on if we're making higher highs and higher lows, or lower lows and lower highs. Then then we have displacement through structure. I'll draw up a quick example, then we'll explain that. So as you can see here, for those of you who know anything about basic market structure, you can see right here, price is making higher highs, higher lows, higher highs, higher lows, higher highs. So let's just say, for example, we was right down here. Price has come into any PD array, fair value gap, order block, inversion fair value gap, and we're down here. Price is moving higher. We're in bullish market structure, so we're making higher highs. Let's just pretend price was going like that from here. You can then see price has now made a higher low. We can see that because we've respected whatever PD array we had here. So from here we would be buying, targeting this high. As you can see, we have displaced through structure up here, so we are likely to continue higher. Maybe up here we had a lower time frame liquidity grab, or there was something on the weekly or monthly, or something from a few years ago on the daily which we swept. That could also give you an indication price is going to go lower. We could go lower. That lower could be this previous high right here, or again we could have any sort of PD array right here. Price has come lower. We've respected some sort of bullish order flow. I'm getting a bit ahead of myself now. And then we've come and displaced through structure. So this essentially gives us a blueprint of what to look for every day. If price has come into somewhere to sell, we're going to look for sells until our first point B, or somewhere down to here. And the truth is we might displace that. We might, for example, we had this as a potential point B, price displays through it. Okay, we're going to trade down to the next one. So if we've displaced through, so let's say a candle's closed right here. So a candle's closed above this high right here. We can easily continue to trade up. We're not going to try to catch a falling knife. We're not going to try pick the top and say, oh, because we've come above here now, we're going to pull back. We wait until we get a confirmation. That confirmation again could be any sort of old PD array, old high, old low, or on the lower time frame, the 4 hour, 1 hour, we might generate some sort of liquidity, sweep that, respect it, and then we can look for price to come down. Okay, so now we know the what, now we need to know the where. And liquidity can be a very, very clear way to find this. So let's say again, we're in our bullish market structure, high, lower high, higher high, lower high. We're then targeting this high. This high is a form of liquidity, is a weak low. We are expecting price to target it as we're respecting here, so we're likely to move up here. This is weak. As you can see, price has come up to here, and we haven't displaced through like we did here, or like we did in the previous example I showed you. We've come up and we've sweeped it. There's a very clear lack of displacement. You can see a huge move here. We've moved up to it. Price has come up. We've gone just above it, and then we've moved lower. This is a very nice point B being here. So point A down here was whatever PD array you want to use your imagination to see us coming into. We've then come up to this point B, and then we've moved lower. So again, seeing how we react to this zone is key to see if we want to look for a reversal being down or continuation looking up. So we've come into this liquidity zone. You can see we reacted with not a lot of displacement. We swept it. We didn't clear it. We didn't displace through it. So we're likely to go lower. That can then be confirmed by this high here. Once we've failed to break this and then broke below this internal, we can very much look for this, which is now a nice area of liquidity, which we've displaced through. We're closing through it right now. So we wouldn't then be looking for price to move back up off this. Price may move lower. There might be something down here. We go into, move a bit higher, and then we would move lower as market structure has now shifted to the downside. Okay, so I hope you've been locked in this video, because if you have, you would understand the what, you'd understand the where, and now you're going to understand the why. Why is price going to target the high? Why are we going to look for this area of liquidity and not this area of liquidity? The answer to that is order flow. So order flow tells us what price is respecting, so we can use that to get an estimate of where we're going to go next. The best way to show you this is to hop on a live chart example. So again, we want to look at what price is respecting. We want to move with the market. We don't want to be brushing against the market, because the market's going to do what it wants to do, so it's going to win either way. So let's look at this. So we've displaced above this area of liquidity. We've made a higher high right here. Price has then pulled back. We've come into this order block, which is our PD array. Price is respecting it and moving upwards. We did consolidate here, but either way, the order flow was bullish, and we respected this bullish order block, and then price has moved up. We've then displaced through this high. Price has moved up, so here and here, again, you would have had a nice trade. Here, we've swept the previous day's high, so you might have even bought down here, come up into here. But then as we've swept that, as I was saying, on the lower time frame, if I drop down to the 4 and just show you, I can imagine this looks pretty nice. Yep, right here, we did close above, but we swept it, and price moved lower. We've then come down into this fair value gap, respected it. So on this day, you could be saying, okay, order flow's bullish. Order flow's bullish here, we went up. Order flow's bullish here. This was a lot more direct. You could have got a lovely, lovely buy here. You could have even bought from here up to this area of liquidity, because we don't know what's going to happen at this high. We could displace through it, but we also could move lower. So we want to be reactive in the market. We don't want to try to pick what's going to happen past the point. We know this high, once we've respected this, is likely to be a draw on liquidity. We just want to get there. That's the low hanging fruit, and trust me, that is all you need to make a lot of money in this game. So yeah, we can even go along. I haven't actually looked, but I could imagine we're going to respect some sort of bullish order flow. As you can see, price has come down into this fair value gap. We've respected it right here. Then we've moved up and taken this high. So as you can see, gold's very simple with what it does. It's very clear. So you can use gold as an example and then move over to other pairs where it's not like a gold or a NASDAQ where we're historically very bullish over a long period of time. And this is a key to getting your bias. As you can see, it's literally, you're doing pretty much the same thing as you're doing on the lower time frame. You'll just do it on the higher time frame. However, it's a lot cleaner up here. It respects it a lot more. As you can see how beautiful this is, and even this. And even though we did close into this, it was still in the consequent encroachment, and then price displaced up. You could have had 1, 2, maybe you lost there 3, 4 trading days. Maybe lost once. But out of 5 days, you could have had 4 very nice trades, and you probably still could have took a trade up to here. So yeah, either way. So I wanted to make this video as this is how I explain daily bias in my review vids. So go watch them. There's plenty of case studies. Hop on the charts yourself, look through this, combine all 3 steps to get some very clear daily bias, which you can use every single day. So yeah, this is the structure I'm going to be going forward with when explaining how I found it. I'm going to quickly be showing the point A to point B. The structure, if we're bullish or bearish, we're looking for continuation or reversal, liquidity, and where we've come from. So yeah, I hope this helps. Any questions, drop them in the comments. I can either make a video on it or respond to you directly, and yeah, I'll see you next time. Okay, so I have just finished recording that video. However, I wanted to drop a few extra tips in just at the end. So there are a few almost patterns that you definitely want to look out for. So the first one of those being, if we sweep a low, as we have here, and then we make a swing low after sweeping that, so after this day here, the next day, we're very likely to move higher. So as you can see, we swept this low is higher than this low, and this low is higher than this low. So coming into Thursday the 20th of March, we want to see price move higher, as it did. This happens quite a lot. The other one, which if I just let price play out, we haven't done this yet. Opening gaps. Price does not like leaving these imbalances. So the idea would be here, we have swept this low, we may be moving higher. On the 1 hour, again, I don't really look at trade Mondays. We've swept this low as well. Obviously, we did sweep this and displace low. We've got fair value gaps, these relative equal highs. However, price does not like to leave these opening gaps. As you can see, there's a huge gap in price here. There isn't a reason for this to stay. Who knows when it will get filled. However, keep your eyes up on this. You can go through the charts and you can see they get filled a lot. I think we actually got one on gold, if I'm correct. Yeah, we got one right here. Price came straight up and filled it in within that, literally within 4 hours. And now we're just hovering around that zone. So keep that in mind. With if we sweep a high and create a swing high lower than that, price is likely to move off. The second one is the opening gaps. They're 2 extra little tips I've just thrown in the end, 2 little nuggets. I've got a whole lot more that maybe I'll start sharing with you. However, only time will tell. So yeah, I'll see you next time.